And remember that during our events, there will be simultaneous translation. So if you would like a pair of headphones, please pick them up in the foyer. Feel free to join with the tweeting today. You can find us on Twitter at T20 Solutions. We are also on Facebook under the same name and as T20 Argentina on LinkedIn. Don't forget to use hashtag T20 Argentina if you post something. And remember that at 7:30 p.m., Marcos Peña, Argentine Chief of the Cabinet of the Ministers, will attend the T20 Summit to hold a dialogue with the think tanks. This will be here in the Sala Argentina also, and will be our final session of the day. Welcome back. We hope you enjoyed all the afternoon sessions. And we will now have our next plenary session of the day, which is on international economics and finance. The moderator for this session is José Siaba Serrate, Counselor Member of CARI. Please welcome them on the stage.
Microphone. So José Antonio Ocampo will be our keynote speaker. Then we will have some key questions, and all the members of the panel, including José Antonio, will give their answers to you. Okay, so we may start with you, José Antonio. Are you ready?
Yes, ready. Well, thank you very much again to the T20 for this invitation to be in this panel. Let me present some of the conclusions of actually with workshop we had in Chinese Academy of Science with Madame Gao, which was an interesting discussion on the issues that, particularly of international monetary reform.
Yes, that was held in, I didn't tell them, that was held in Beijing.
Yeah, in Beijing. In Beijing in June.
Yes.
Yeah.
Under the sponsorship of the Chinese Academy of Social Studies and Boston University.
Boston University
the
was
GDP
also a
Center.
Yeah.
It was a discussion on monetary reform, on safety nets, and many other important issues. So, José Antonio.
So let me start by underscoring some of the major issues from that work. The first one is on the reforms of the global reserve system, in which we look forward to a world with a multi-currency system, in which, therefore, there are more competition, let's say, with the US dollar, but at the same time, with a more active use of the IMF special drawing rights as a basic instrument of international monetary cooperation. Actually, the SDRs are turning 50 next year, so I hope they will become a major topic in the agenda. In particular, the idea of SDR issues becoming the major instrument of financing of IMF programs, so that the IMF becoming a totally SDR-based institution is one of the proposals in that agenda. Now, a second problem is to strengthen macroeconomic cooperation, and perhaps closest to associated to that, the exchange rate, more exchange rate coordination. Now, in that regard, I must say that the world has today probably the most elaborate system of monetary cooperation, led by the mutual assessment process of the Group of 20, but also much stronger IMF surveillance. However, that system doesn't seem to be working enough to be able to avoid new global imbalances. And the most important global imbalance, according to my analysis, is actually the change in the Eurozone balance between a deficit and a surplus. There's a deficit in 2008, a large surplus today, whereas the Chinese or the Japanese surpluses have actually been much more moderate in recent years. So how to work in a stronger way to avoid global imbalances of significant magnitude seems to be still a pending issue in the international agenda. On crisis prevention and resolution, we first of all welcome the work that the IMF has been doing on management of capital flows, which is a very important problem for emerging economies and developing countries. However, at the same time, it is surprising that the Financial Stability Board has not really dealt with this issue. It's as if cross-border capital flows was not a source of risk. So the IMF clearly recognizes that it's a source of risk, and now we're seeing again in the emerging world the problems associated with the volatility of capital flows as a major problem. In terms of balance of payment financing, there has been a significant improvements with the 2009-2010 IMF reforms, also much more macro-oriented conditionality, which is a step forward in that regard, but at the same time, there is still a very insignificant role for, let's say, for contingency or preventive credit lines, which it should be become a more important issue in international monetary cooperation. In fact, the flexible credit line, for example, is only being used today by Mexico and Colombia, so that in a sense, the world should be moving in terms of the international financial safety net to something closer to swap credit lines, which is the major mechanism of cooperation among central banks. In terms of the debt workouts, we still lack a system to manage sovereign debt. The mechanisms that have been developed in different stages in 2003 and 2014 basically rely on collective action clauses and voluntary negotiations. There has been a correction of the problems, notably those that the Argentinians face in U.S. courts in 2014, which was a major problem for Argentina. That problem has been corrected in the new issues, but we still lack a real mechanism of international debt workouts for sovereign debt that has to be corrected. Let me also say that the new emerging countries turbulence, let's say, raises questions about to what extent contagion is more limited. So far, contagion has been more limited, but we still have to see. I mean, I'm an optimist in that regard, but we still have to look forward. Now, in terms of governance, one very important issue is, of course, the voice and participation of developing countries in the IMF, and of course, the World Bank, the Bretton Woods Institution, which is an issue that is back in the agenda, but in which there are many, many remaining problems due to the underrepresentation of developing countries in the Bretton Woods Institution. And the other issue that we underscore quite significantly is the focus, giving a stronger role to regional financial arrangements. The system of multilateral development banks is what I call a dense system, which aside from the World Bank Group has lots of regional development banks, sub-regional banks, inter-regional banks, the Islamic Development Bank, the New Development Bank, etc. But the international monetary system doesn't have anything like that. There are, of course, new institutions that have been created, the Chiang Mai Initiative of the Asian crisis, now the European Stability Mechanism, but it's relatively lots of vacuums, let's say, in that system, and therefore, I actually welcome the fact that the T20 has included that as a major recommendation for the IMF. And let me also welcome the fact that the T20 took on board the issue of crypto assets, which is becoming a major issue for all central banks. And I mentioned that as a member of the board of one of the central banks, and the lack of clarity about how to manage crypto assets. I mean, fortunately, you also use the word crypto assets and not crypto money, currency, which I think is an advance by itself. But how to manage the crypto assets remains a really unsettled issue. I mean, from the point of view of us, for example, of our analysis in Colombia, we see two major problems: the fact that they are used for all sorts of illegal purposes and tax evasion on the one hand, but also the fact that all financial assets have some backing by some, whoever issues the bond or the stock, and of course the currencies, which are backed by central banks. But in the case of the crypto assets, there is absolutely no backing whatsoever. So it's a very peculiar instrument with lots of volatility and lots of distortion that really there has to be consensus on how to manage them in the international system. Those are our major conclusions. Thank you very much.
Okay. Thank you, José Antonio. These were the conclusions of this side event, a seminar in Beijing. They were translated very rapid way If you want to know more, I suggest reading José Antonio's book on the monetary non-system, as we call it, and the need to resettle the system, and there you will find several chapters dealing with each of these particular questions. So now I think we have the question there. It's referred to Lehman Brothers. It's interesting to note that when one asks the people about the Lehman crisis and what they think, if they think we have learned something from the crisis, they almost always say little or nothing. But if you review the policy briefs, the agenda of T20, there's a little reference to the chance of occurring another crisis. So in a sense, people might believe that if a crisis happens, God would provide us with a solution. So here that we have this panel, why don't we ask them and hear your opinions on that issue? If we have another crisis, we will have the same type of reaction or the possibility of getting enough coordination or cooperation so as to stop it, or what other thinking or opinions do you have on this matter? We might start with whoever wants to pick up this question. Want you, Paola, to start?
Thank you. I don't think we can answer this question in a very clear way. We're trying to understand what was the features of that crisis and what would be the feature of the next crisis, which might not be exactly the same. And perhaps we should reflect on what has been done over the last 10 years, and perhaps a bit of history of the crisis resolution from September 2008 to more or less, I would say, the G20 in South Korea in November 2010. And I think those 2 years were critical, first of all, because of the level of coordination cooperation that allows to respond in a sort of coordinated way to the crisis. We can have a counter-argument here, and which is everybody was falling. There was this sort of synchronized collapse in demand and then in international trade, and therefore everybody reacted in the same way. When actually policies and conditions, the economic conditions started to diverge late 2009, then countries responded in a different way. And that was very clear when the G20 started to underline the need for more fiscal austerity, in particular on the back of the newly elected British government. But at that time, it was possible to respond to the crisis because the politics was not in the way. And I think this is something we need to bear in mind. Should we have another crisis? And should we have another crisis under the current political circumstances? So there was no noise at the political level. Therefore, it was easy to design a kind of solution to rescue banks. And we know the mistakes were made, but I'm not going into the things. One thing we need to reflect, based on what José Antonio said about the international monetary system, was that in October, I think it was early October, the then President of France, Nicolas Sarkozy, called for the new Bretton Woods. And that was a sort of major soundbite and didn't lead to anything, except the G20 meeting in Washington, D.C. as leaders meeting as opposed to finance ministers meetings. Why it didn't, in the end, generate a new Bretton Woods, and why we are still here debating whether or not we are prepared to the next crisis. And there was no Bretton Woods because, first of all, because Bretton Woods didn't happen overnight, but it was something that happens over a debate that lasted about 10, 15 years. And so that Bretton Woods somehow acted as a way to cement this debate. The international monetary system was mentioned at that time, was mentioned again by the Chinese, in particular the governor of the Chinese Central Bank in March 2009, when he said, basically, enough with one single currency, we should think in terms of a multi-currency system. And then again, the Stiglitz report a year later talked about we should look into a global currency, and then they dismissed it because, again, you mentioned the SDRs. The SDR then can be used as a sort of support to a multi-currency system, but it cannot really replace any of these currencies. I think the point we have here is it's true we need a multi-currency system, in particular if you look at a monetary system in terms of volatility and in terms of liquidity, which were the two issues which emerged in 2008. But we do not have a system, unlike Bretton Woods, that allows somehow a simultaneous equilibrium, internal and external. And to be more specific, we haven't resolved this problem. We still see, and we had two examples, emerging market economies, 2013, taper tantrum, but even now, where actually the need to balance the external balance really creates a huge political and economic problem domestically. But we have it in Europe. Well, we had it in Europe with the so-called sovereign crisis, and in particular the divergence in between Northern Europe and Southern Europe inside the Eurozone, which is a fixed exchange rate mechanism. And so constraint, and the only way you can adjust is either by deflating salaries or creating more unemployment. We haven't come out of this dilemma. And this dilemma to me is what is create this absolutely dysfunctional politics around the world, or in the United States, but in particular also in Europe.
Thank you, Paola. Haihong, do you want to add something to these?
Right.
Maybe talk about the safety nets.
Safety nets now? Okay.
No. What you
right. I think, yeah, we had discussion on this safety nets in Beijing and then in some other places, and this is key issues of the international financial architecture. And we have the task force, and we finished the excellent policy briefs. And of course, one of the lessons we learned from global financial crisis is the vulnerability actually can be transmitted cross-border and cross-sector and cross-markets, and especially the spillover effect through many channels like banks' balance sheet, capital market, real sector, and monetary policy as well, can be actually a source of financial instability, which makes financial stability actually a policy objective for some central banks already. And of course, it's a strong case for cooperation. So this is basic issues we need to reflect. And we still need to understand how vulnerability to build up and how the spillover presents itself to have this kind of contagious effect on the economies. So come to current situation, I think is quite relevant when we talk about the financial safety nets. And we see, the massive currency sell-off in almost all the emerging economies, and capital outflow tremendously in the past month. And this is a sort of signal of the vulnerability. But behind it, actually, there are a lot of source of risks like current account deficit, extensive external liabilities, especially dollar liabilities, which makes all the external positions are subject to dollar liquidity cycles, which obviously is affected by Fed policy. This is one case of the policy spillover. And of course, the domestic vulnerabilities like physical position, weak physical position can be translated into a pressure on the currency and the capital, and of course, it's exaggerated economic shocks. So all of these vulnerabilities adding up together. Some countries have different combinations, but some others, have more severe problems. So now, actually, the question is: do we have the possibility to have another crisis? This question being asked many times recently, And I think this really depends on how policymakers react and how buffers we have. So now basically we have for individual countries, we have the first defense line is, of course, reserve, forex reserves. But for many countries, in weak current account balances, normally they have a very limited source of forex reserves. And the second one is we call the macroprudential policies. There are a bunch of tools to manage capital flows. And cross-border help is crucial in the case. And the global financial safety net actually is a combination of different levels of helps. And for the regional level, we have in Europe, we have the European Stability Mechanism, and in Latin America, we have the Latin American Reserve Fund. In Asia, we have the Human Initiative Multilateralization mechanisms. Basically, there are many. BRICS, we have another, contagion arrangement. Basically, there are scatters of this sort of regional arrangement, which is very helpful, and many of them are actually enlarged very quickly. And bilaterally, there are a lot of swaps, and we have the permanent dollar swaps among 6 central banks of developed countries. And there are many others, almost 60 countries have such kind of swaps. And at the top, or we call it in the center of this global safety net is, of course, IMF programs. And we have discussed this, frequently on how to improve the IMF programs. And this is something we need to work on. And basically, IMF is still the most important lifesaver. And I think Argentina actually is very familiar with the IMF programs. And many other countries actually still rely on this. But there are more has to be done because, it's kind of, this safety net there are many problems. We discussed this, like segments and many others, the risk, the waste of resources. But anyway, this is just the effort we made to build up buffers against this spillover, because there's no one country can deal with these vulnerabilities.
Thank you, Haihong. Homi, we are eager to listen to your ideas.
Couple of points to add to this. So one of the things I think we learned from the Lehman Brothers, post-Lehman Brothers crisis is that if you try to have some kind of a program without thinking at all about debt restructuring, it becomes very difficult. And, to some extent, this was managed for some high-income countries. I think when it comes to emerging markets, and particularly for low-income countries, that's going to be extremely difficult. And I want to come back to José Antonio's point that we still do not have a sovereign debt workout mechanism. Now, we haven't had one for a long time, and that hasn't really mattered in the past because, to some extent, it was always feasible to craft some kind of a solution in a crisis on a case-by-case basis, and we managed to do that. The problem right now is that development finance has really broadened. Development finance used to be very concentrated in a few official agencies. I mean, there were some multilateral agencies, a few bilateral big development agencies, but a real handful of agencies. Now development finance encompasses a whole range of different financial institutions, and very importantly, it encompasses a range of different development finance sources from different kinds of places. So I would say that we have almost 2 completely separate systems that are now operating. We've got the system of the traditional development finance, which is still going on, and then we've got some new systems, and in particular, we've got one very large, important new system, represented by Chinese development finance or development finance coming from selected Chinese, mostly development banks, but also others, but also other countries. India is a massive provider of development finance, maybe in the order of $10 billion per year now over several years. These other sources of development finance, A, are not recorded in the world's sovereign debt registries, so we don't know how much there is, and B, will complicate any kind of sovereign debt workout. So just imagine, what will a program, what will an IMF program look like if there is Chinese bank liabilities that have to be paid off? Will they be treated in exactly the same way? Sitting in Washington, I can, at least imagine a scenario where there will be some people in Washington who would be absolutely aghast at the idea that Western funds are being used to bail out Chinese banks, especially given the current environment that we have. This is going to complicate things enormously. And so I would say, watch. There are now countries where these are quantitatively very big numbers. So watch countries like Pakistan. Pakistan probably has $50+ billion now of commitments under the BRI. It has an IMF program. It owes $15 to $17 billion to the IMF. It will need to go back to the IMF for a program renewable because it does not have this kind of cash at hand. Exactly how is that program going to be constructed? How are they going to learn about and understand all of these other kinds of debts? So this, to me, is it's a big problem and issue. It's not restricted just to Pakistan. It's going to come up in a whole series of other countries. And fundamentally, it is a story that we do not have agreement on how these various different kinds of liabilities should be taken into account. I think the implication of that is that countries that get into trouble are not going to be able as easily to go to a traditional mechanism for a workout and will have to rely on their own tools. So their own domestic macro discipline, macroprudential tools, and all the rest. I suspect that the implication is an effort to go back to self-reliance in terms of the global safety net, and certainly to much more macro discipline. And woe to the country that gets caught in the crossfire of these kinds of geopolitical divides, which are now going to start to impact on this global financial safety net that we've created, especially in developing countries.
Great, Homi. José Antonio?
Well, let me broadly say that I think in terms of financial regulation and supervision, we are much better now than we were prior to the 2008 crisis, including the macroprudential regulations that are in place that are, in a sense, a significant innovation. What I see much more limited, of course, there are some countries that want to get out of that strong regulation, which is a risk now that we should not underestimate. Now, on the other hand, in macro, I see probably less policy space. Even if you have cooperation, policy space to do things. Why? First of all, because the debt ratios of all countries are much higher now than they were at the time, which is a constraint. In the case of the major reserve currency of the world, the fact that the fiscal deficit is very high and the debt ratio is increasing, so that let's say a new crisis will hit the United States with extremely high debt ratio, which makes it much more difficult to manage. I also will mention the fact, so for example, for expansionary fiscal policies, the space will be much more limited. Even in terms of expansionary monetary policies, The space is probably going to be much more limited. Perhaps not in the U.S. There will be some margins, but in Europe, very limited margins, for example. Anyway, now and I will also point out that I think one of the greatest things that happened after the 2008 crisis was the Chinese adjustment, expansionary adjustment. I call it the most aggressive Keynesian package in history, what the Chinese did after the crisis. Now, I'm not sure China will also will have the same space to do such an expansionary policy if a crisis takes place relatively soon.
Okay, I guess Paola has something to say.
Yeah, I'd like to say something then, Homi, building on what Homi said. I think the crisis in 2008 was global and originated in the United States and in the United States banking sector, and it moved to Europe. What you say about the sovereign debt in particularly developing countries is absolutely true. We don't have a debt resolution regime, and that should be something that the G20 should look into it, except they don't want to do it for obvious reasons. But it's not going to originate. A global crisis will not start from the developing countries. It will start again in Wall Street and Europe. And again, the issue about we look into financial regulations, there was a big effort made in 2008. We did well, but basically we did well in an exercise of box ticking. There is a lot of box ticking now, and mainly the whole action was concentrated on capital requirement. But for example, think about hedge funds. Hedge funds can leverage 58% of their capital. Hedge funds are exposed to the emerging market debt. They can come out very easy because when they hit a certain level of capital, they might download their exposure to some countries. So these are really, I think we need to understand, and I think the G20 should really try to make an effort to understand the dynamics of financial trading and the leverage that is behind that. Now, which are the big risk we have at the moment on the table is the fact that we have short-term debt for long-term exposure. There is low leverage. There is asset prices are very high in all sort of categories and group of assets. And so if the bubble burns somewhere in the financial markets, developed financial markets, Wall Street, UK, London, and the key centers, then we'll actually generate another financial crisis. Are we ready for that? Do we have enough financial power to respond again to this crisis? And as Haihong will say, yes, we might have the global financial nets, but don't forget, and at the time of the 2008, the IMF sort of put up all their resources at the time of the London summit in April 2009. But the big effort was done by the Fed with swap agreements with central banks. Will the Fed, under the current political situation, be ready to underline, to create a free line of credit to some of the developing countries and European central banks?
Well, now that's your turn, Homi.
Yeah, look, I just very quickly, I think we have to be very careful about putting too much weight on regulators to try to, predict and or solve a crisis. They didn't do such a good job last time, and it's not obvious to me they'll do such a good job this time. And then very quickly, last time I think there was ex post, it became clear that the market had fundamentally mispriced some assets, and in particular subprime mortgages. This time round, just think of stranded assets in the fossil fuel industry and the potential for their mispricing. We know that the reserves that are currently being booked on the prices of these companies cannot be exploited. We just don't know which. So right now, in terms of just financial valuations, they're all there. But we know as an aggregate stock, I mean, you can decide on exactly how big that asset valuation loss will be. There is a tremendous potential for losses that are sizable enough to cause another global shock. When that will happen, how it will happen, remains very unpredictable, as I think was the subprime mortgage. But let's not underestimate the risks that we actually know are actually out there in terms of the valuation of some financial assets that are held by financial institutions.
What do you think, Haihong?
Just respond to Antonio's point. It's absolutely the case that in terms of the policy tools, we have much more options except physical policy limitations. And of course, especially the macro-potential you mentioned about is very recommended, especially in dealing with the, we call it gross capital flow, which is much more important than net capital flow. When we look at the data, normally we use net capital flow. Basically, the gross capital flow are linked to, flows linked to the sudden stop and the capital flat, which actually are the trigger of the capital account crisis.
Great. We have other 3 questions. You might take time to read them. Let me, apart from moderate, put some ideas on the table. I think it might be interesting to make a summary of what has been said and put it in perspective. Paola said that we don't have a mechanism now to achieve at the same time equilibrium in the external sector and in the internal sector. That was the case in Bretton Woods system when we choose Harvey Dexter White over Keynes' vision, and we put a system into place that had an adjustment that was asymmetric, and we choose one currency as the reserve currency. The problem was, or there was no problem for many years in Bretton Woods due to the lack of capital mobility. And in the first years, even the current account was not convertible. But now we have a lot of capital mobility. We have had a big expansion. We had Cold War those years. We are now entering something, and I took your line. Politics have changed a lot relative to where they were in 2008. And we are entering a kind of Cold War at the same time. But during the Cold War, we have 2 systems, as you said. One was for the people this side of the curtain. And people, the other side, had their own system, the Soviet system, or whatever you call it. They were not linked. The problem now is these 2 systems are linked, as you said. Homi is from Pakistan. Pakistan can cherry pick between getting assistance from the IMF or from China.
No, it doesn't cherry pick. It picks all cherries.
It picks all the cherries, okay. So if we have a problem, we will now be in a situation where the 2 systems are intertwined. Companies in the US, the big companies, have their manufacturing base in China. And they sail everywhere, and they generate profits for their investors in the West world. So this is very interesting because in a sense, we are getting into a situation where we have been in the past, but with totally different circumstances and a rapidly evolving political system that we do not know where it is going or heading to. Just to make this a little bit more tricky, I think President Trump is also pushing the limits. In a situation where we have all these weaknesses, he's pushing ahead with tax reform in a very aggressive way, with very huge deficits that put more pressure on the system, that diminishes fiscal space if something goes wrong, and at the same time, he's pushing with the trade conflicts that creates another source, a big layer of problems. So we don't know when a crisis might happen, but it might happen very soon if any of all these weak pieces, if just 1 or 2 of them fall apart, okay? So now that you have had the time to read these questions, I give you the voice to anyone who can or who might wish to start. The questions are, how can we secure financial stability? Well, we have treated that. What can the G20 do to enhance cooperation? And something about the future of finance. Where does it lie? What things we have to observe, etc. Whoever wants to, maybe you, Paola?
I already talked a lot.
Oh, yeah.
Well, I already talked about that extensively.
Yes.
And I think, but I agree that the global financial safety net is much denser now than it was 10 years ago. So I think I look positively at that. I think it can be enhanced. And particularly, don't underestimate, since I'm a particular fan of that, the potential role of the special drawing rights.
Okay.
I mean, the issuance of a special drawing rights in 2009, which was the largest in history, did contribute, and the world could use much more actively the special drawing rights. That's a kind of using the IMF as a world central bank, which is a new mechanism of cooperation that has not been used so far.
Okay, but I guess there was some objection in Subacchi's position, maybe referred to the fact that there's no private demand of
yeah, but
SDR.
by the way, you don't necessarily need a private demand. I mean, you could have a private demand for SDRs. Yeah. China is particularly interested in that, and that's positive. It can happen. But I think the SDRs have been, since I am one of the very few persons who have done research on the SDRs. By the way, that's part of the problem, that they have not been studied enough. But there is a kind of a market of special drawing rights as they are, which is what I call central bank money. Yeah. It's money that central banks can use to pay other central banks. And even in that limited way, they can actually be very actively to support countries. Particularly, even if you do something obvious, which is try to do an allocation in a different way to the way it has been done. For example, give more to developing countries, for example, which makes sense from the point of view of the fact that developing countries are much more sensible to volatile capital flows, and therefore they self-insure against crisis in a much more aggressive way than developed countries. So I think that instrument can be broadly used. But for example, regional financial arrangements, Chiang Mai has not yet been used, for example. That's one alternative which is interesting.
Well, my objection to SDRs is not an objection. The SDR have a limited function, and their function is to stabilize, to really smooth volatility in the monetary system. I think if we go back to something like a more structural, and particularly if the goal of the G20 to think in terms of should we need a different system, reform the system we got, then in that case we are still in a situation where we don't have a system which adjusts, or at least the adjustments are asymmetric and very costly. And back to your point about cooperation, this is an example of asymmetry. And again, remember 2010, the Brazilian Minister of Finance, when he said, we are going down to currency wars because the United States, because of QE, in the third round of QE. So whatever you look at it, the emerging markets are always at the receiving end of the spillover impact from the monetary policy of the big guys, i.e. the United States, for obvious reasons, not because the United States are particularly perverse and they want to punish the emerging markets, but because of the structure of our international financial and monetary system. So and they always face the same dilemma, follow a completely anti-cyclical monetary policy in order to stem off the capital inflows or outflows and try to manage their macroeconomic stability. So is there a room there for the G20 to cooperate? I think the answer is possibly no, because for the simple reason then the big guys are not prepared to compromise their monetary independence for the sake of the emerging markets. They prefer to say to the IMF, all right, if they get into troubles, then you will intervene and you try to get them out of trouble, rather than us change our monetary or somehow tame our monetary policy approach because of the spillover impact of the emerging market. And by the way, it's not only emerging market. Canada had a massive spillover impact from the United States monetary policy at the time of in 2010 and 11. Switzerland got a big, again, impact from the euro because of that. And you need to manage this kind of instability. Can we cooperate? I don't know. That's my answer, but maybe somebody else, maybe others have different views.
Maybe you, Homi?
Yes, I think that there are things that the G20 can do to cooperate on a grand scale. Perhaps right now that's a little difficult. But then there are also quite a few things I think that the G20 can do to cooperate on a very small scale. And let me just give one example of a small thing, but potentially useful thing that the G20 could do. So Lara Heitman talked to us about the progress that had been made on developing infrastructure as an asset class under the Argentina G20. Well, if you really want infrastructure to be an asset class and for that to, in turn, assist in the scaling up of infrastructure financing, because that's why we want to make infrastructure into an asset class, you have to deal with some of the regulatory rules that have been put in place. Yeah. So just think about the following. We ask banks, because banks are mostly involved in project finance, we ask them to lend to developing countries, strike one. We ask them to lend for infrastructure, strike two. We ask them to lend long-term, strike three. How are we going to get financing, bank financing, into infrastructure as an asset class under these kinds of rules? There have been lots of studies done to say, are these really real risks, or are they just perceived risks and the result of what regulators feel are risks? And the studies that have been done, by and large, suggest that there is no real difference between risks of investing in infrastructure in developing countries compared to standard corporate risk in advanced economies. So there's a little bit of a misperception there. The G20 could do something to do some more work on it, persuade themselves of what the real risks actually are, and adjust the regulatory rules to take that into account. And then if you allow me just one last thing, because all of this is a bit doom and gloom, and your last question is about, ESG, etc. So here I think is an area where things are actually going well. Next week, Michael Bloomberg will announce the rollout of metrics that have been developed by the Sustainable Accounting Standards Board that he's been supporting in the United States. They have broken up, the world into 70 different subsectors, and for each subsector have defined what kind of environmental and social and governance indicators make most sense. And they've developed benchmark indicators from the past so that now if corporates choose to actually report in that fashion, they'll be able to say, we are doing better than the industry standard, worse than the industry standard, and make some adjustments accordingly. Those kind of metrics, and right now it's more of a voluntary thing. Hopefully voluntary will mean that there'll be a race to the top and boards of directors will force management to do this. But what I feel that kind of benchmarking can do is really provide the information so that asset managers, people making financial decisions, can actually think about finance doing what it should be doing, which is supporting the real economy businesses that are actually contributing to all of the things we want in this world, rather than just looking at finance as finance somehow independently and de-linked from the real economy. So I actually think that these kinds of, again, seemingly quite small metrics could have very important and powerful market signals and very strong incentives for companies to start to change the way in which they do business and how finance will be allocated potentially across the world.
Okay, so we are finishing with a touch
Optimistic.
of hope. I might say that this is important not only for developed countries, but for emerging ones. Legendary American investor Marc Mobius, who used to work for several decades for Templeton, he retired, he's opening his own fund, and he's saying that he will invest in emerging markets using ESG criteria. And he says that the key to earn money, big money, he speaks always of big money, is to invest not in the companies that already stand very well with these benchmark, but in companies that do not know these benchmarks exist and that they will have to adapt themselves in the future. So this is very good throughout the world, I think, very interesting even for emerging countries. We are in time. If anyone wants something to say, any additional contribution, take your advantage or it will be the last chance. Okay, thank you very much.